Hi everyone, today's video is about one of the most hated in the list when we talk about home loan, or probably the most hated one. That is the lender's mortgage insurance, or LMI in short. Lender's mortgage insurance is an extra cost to your loan if you don't have enough deposit for your house, and it can be very expensive. I will explain what is lender's mortgage insurance, how it works, and what you need to prepare for yourself if you can't avoid it. And towards the end of this video, I will review one of the most kept secrets in mortgage. I will walk you through a computer screen so you will see exactly what it is and you know how to handle it so that you don't get crash and burn. If you are new here, my name is Dennis May. I'm a licensed mortgage broker for more than 10 years and top 100 broker nationwide. Mortgage broking is the main business of myself and our team. We are passionate about getting the best possible mortgage solution to our clients and being part of their journey towards their financial goals. Also, we love to share our knowledge and business insights in YouTube channel as well as the hints and tips on mortgage finance for people like you to save money and time no matter you want to buy your first home, change your loan for the better deal, or invest in properties. So make sure you hit the subscribe button and turn on the notification bell so you don't miss a thing. So we are going to talk lender's mortgage insurance and the trick that most people are not aware of. And let's just get right into it. Before diving into lender's mortgage insurance, I need to quickly explain one of the most important concepts in mortgage, that is loan-to-value ratio, or LVR, in case you are not familiar with it, because lender's mortgage insurance is directly linked to it. LVR is simply a ratio of loan amount over value of security property. The banks use LVR to measure and control the risk in mortgage lending. Let's say you want to buy a property of $500,000 and borrow $400,000 using that property as security. The LVR in this situation is $400,000 over $500,000, which is 80%. Also, in this case, you need a deposit of $100,000 or 20%. Now, if you want to borrow $450,000 to buy the same property, the LVR will be $450,000 over $500,000, which is 90%. And the deposit required now will be $50,000 or 10%. For the banks, 80% LVR is the sweet spot and the line drawn on the sand. If LVR is 80% or under, the loan is considered to be safe and low risk. Above 80%, the banks will consider the loan as high risk and need some coverage. That is where the lender's mortgage insurance comes to play. When you borrow more than 80% of your property value, or LVR is over 80%, the bank will need lender's mortgage insurance for your loan. LMI is an insurance policy to protect the bank in case you can't repay the loan back to the bank in full. For example, if you borrowed $450,000 as a home loan from the bank using a property worth $500,000, the LVR in this situation is 90%. Because the loan is over 80%, the bank will need a lender's mortgage insurance to cover themselves. If for whatever reason you can't keep making the repayment of the loan, and the bank could only get $430,000 from the sales of the property, while the loan balance is still $440,000, the bank will be $10,000 in short. In this case, the mortgage insurance company will chip in and pay $10,000 to the bank. That's how lender's mortgage insurance works for the bank. So you can see lender's mortgage insurance is to protect and cover the bank, but you have to pay for it. Now you will ask how much the mortgage insurance will cost me. The cost of lender's mortgage insurance depends on many factors, such as loan amount and LVR. If loan amount is bigger, the mortgage insurance will be more expensive. It's obvious. The risk on 95% LVR loan is higher than 90% because the chance for the bank not to get all their money back is higher. So the premium of mortgage insurance will increase if the LVR is higher. There are some other factors as well, such as the bank you choose, the location and the purpose of the property, whether the property is used for your home or for investment. The other factor is insurance company. There are two insurance companies offering lender's mortgage insurance, Genworth and QBE. Most banks choose to use one of them. The mortgage insurance premium needs to be paid when your loan is settled. There are two ways for you to pay the mortgage insurance premium. Number one, you can pay it from your pocket. It can be a problem for most people because they only need mortgage insurance when they don't have enough deposit in the first place. To solve this problem, banks will also allow you to borrow the insurance premium. It is called LMI capitalization. It simply means the bank will lend you more to cover lender's mortgage insurance on top of the loan you want. For example, if you need to borrow $450,000 and the lender's mortgage insurance is $8,000. If you use capitalization, the bank will lend you $458,000. On settlement, the bank will use $8,000 out of your loan to pay to the insurance company and give you $450,000 to buy the property. This is how LMI capitalization works. With that being said on what mortgage insurance is and how it works, let me turn to what you need to prepare yourself before applying for a loan with LMI if you can't avoid it. Once the loan is in LMI territory, the bank will raise the bar to assess and approve your loan application and will scrutinize more on your financial positions, from your employment history to the pattern and history of your savings and expenses. As a rule of thumb, you need to work in the same job for more than 6 months and have a clear credit history for the last 2 years. You also need to demonstrate that at least 5% of your deposit is your actual savings for more than 3 months. It is called genuine savings. When your loan needs mortgage insurance, the bank will require more supporting documents from you and take longer to process your loan application. So I strongly suggest you obtain a pre-approval first before you go out shopping for property so that you have enough time to get your finance sorted out, especially if you need to borrow more than 80%. Nothing is worse than that you've paid a deposit to the house and only find you couldn't get the finance. Now guys, remember I said I will review one of the best kept secret in mortgage in the beginning of this video. Now here it is. It's related to the cost of lender's mortgage insurance. The premium of lender's mortgage insurance can vary from bank to bank in big time. How does it happen? Let me pull out my computer and walk you through the mortgage insurance premium calculator screen so that you can see what I mean by it. This calculator will work out how much the LMI will cost you for different loans with different banks. Let's say you want to buy a property in New South Wales for $500,000 and borrowing $450,000, which is a 90% LVR. You can see I can scroll and choose any bank from this lender selection list. Because of credit license and compliance regulation, I'm not allowed to show or mention the name of any bank with their particular product information here. So I have to cover the bank name I choose before hit the calculate button. Now you can see the LMI premium for this loan and for a particular bank is $7,715.25. Now let me choose another one and calculate. Wow, you can see that out of sudden, the premium is jumped to $10,818. This is $3,100 more. That is almost 50% more than the previous one. The only change we've made is choosing a different bank. Everything else is the same. Hi guys, what does it all mean to you? For almost every aspect of a mortgage, it pays to search out information and compare different banks when you apply for a home loan. The best and easiest way is to engage an experienced mortgage broker early, because they have the resource and the right tools to find the best deal for you. It will also give you enough time to prepare the supporting document and clear your deck if necessary, especially if you need to borrow more than 80%. If you want to find out how we can help you, simply give us a call. You can find our contact details to the right of the screen. Alright guys, that's it. Make sure to press the like button if you find this video helpful and share it to your friends if you think it will help them as well. Also check out the video on the right of the screen, it will give you some extra information. Alright, thank you for watching this video. I'll see you on the next one.